Hello, listeners. Welcome back to SocioCast'20, Enactus Hansraj's first podcast series. Over the last three episodes, we've discussed some of the wide ranging problems faced by major industries due to the novel coronavirus. Today, we will talk about an industry which directly and indirectly forms the base for the entire world. An industry which is on the verge of a paradigm shift, and an industry which is accessible to all the people around. Yes, ladies and gentlemen, we're talking about the banking and the financial services industry. And to provide further insights into the same, we have with us Miss Kanika Rana. She has a master's in economics and has been working in the treasury and finance domain with Ernst Young's corporate treasury practice. Her latest paper on patterns of access to microfinance loans stands as a testimony to her personal research interest in this area of debt, financing, and development economics. I would now like to hand over to my co-host for today's episode, Janvi Wick, to take over to the question and answer segment.
Thank you, Karthike. We're very happy to have you with us, ma'am. Beginning with our podcast, we've been reading a lot of articles which show how consumers have changed the way they make transactions. So, do you think there will be a shift from cash to cashless transactions in the light of COVID 19?
See, when you look at the talks about a move from like a cash to cashless economy, it has been going on for a while now. Like if you go back a couple of years, demonetization in 2016 was probably India's first big step towards digitization. And obviously, like along with that, there were several other measures like Jan Dhan scheme, just basically to fulfill the dream of like this digital India. If you look at end of last year with the government's directive towards deepening digital payments, this entire buzz around converting India into like a truly cashless society really picked up. While if you look at like the India's cash to GDP ratio, it was still like upwards of 10%, which is one of the highest in like the developing countries. Right. I was also like reading this, and you'll be surprised to know that in India, almost 2% of their GDP is spent on just printing, storing, and distributing cash. So, you know, that while there are other many challenges of becoming cashless, like there's a lack of digital infrastructure, there's a high dependency on cash, the financial inclusion still is like fairly low. The literacy rates are really low. All of this kind of restricts India's transition into like a truly quote unquote faceless, paperless, cashless kind of economy. But year 2020 has been a surprise to say the least. Like, I guess like it's the year of new opportunities for the fintech space. You have, when you look at your initiatives like Aadhaar enabled payment system, UPI adoption, or like promotion of BHIM app, all of the strength of these measures as of now stands quadrupled, with the country pretty much coming to a standstill because of the coronavirus pandemic. So, along with that, you know, when once like social distancing is imposed, there is extreme paranoia amongst the citizens. You are looking at leading economies in the world, which basically sprung into action as soon as WHO recommended that cashless transactions are the way forward. This happened sometime in early March. If you look at China as an economy, thousands of banknotes were being destroyed or disinfected to eliminate the spread of the virus. US did something which was also very interesting, where they started storing their banknotes before whichever ones were coming in from Asia, before they kind of circulated them back into the economy. Sounds crazy, right? Like I had read this, and this may not be true, but this article said that Canadians are taking the advantage of like their notes being made out of plastic, and they are trying to give them, like they're basically giving it a swing in the washing machine before they use them. So there's like a definitive increase in the number of cashless transactions as the coronavirus pandemic will limit the use of physical cash, and more than that, cash is going to be viewed with like maximum suspicion. To give you a very personal example, actually, every time I transact in cash, I sanitize it, iron it, and then use it further. So, like, I don't know if I'm being too paranoid about it, but I feel like exchanging cash is one of the easiest ways to expose yourself to the virus. No? So, I think it's probably safe to say like digital payments that were convenience ones are now like a sheer necessity. So, while all of this seems pretty intuitive and this is probably the way forward, and whether we like it or not, this transition is going to be accelerated multifold given the current scenario. Um, I guess the question that we need to ask ourselves is how are things going to change? Are we ready for this kind of change? How is this going to pressure our financial system? Like, are banks strong enough to sustain the stress? Will people have confidence in digital society, like a digital and a cashless society that we are envisioning of moving into? How will banks set up safe, secure, compliant data centers in their premises for data storage? And maybe like what role potentially like these emerging technologies like blockchain is going to play in securing payments. So that's the kind of dilemma that we are sort of living with. Well, the coronavirus pandemic has taught us that, human civilization needs to establish cashless societies. The pressure on the banks is a massive restriction for that. So,
Right, right. So, do you think this cashless transaction buzz will stay alive even after the pandemic?
Probably, like I think it's not like a one-time thing, no. Because of the pandemic, there is going to be a sustained pressure for us to evolve, and I think that is essentially going to dictate and pave a way forward for us.
Right. So, further on the idea of cashless transactions, many financing agencies who earlier dealt with most customers offline are now shifting to more online methods. So, do you think this poses a risk for the rural inhabitants who are by and large dependent on loans and don't have access to such online technologies, mobile data, phones, etc.?
You've brought up a very interesting point, and like since you particularly mentioned rural inhabitants, I have to mention this whole rural urban divide. No, this debate is kind of going on forever. So if you look at in terms of direct access to internet, while only 20% of rural India will have that kind of access, urban India has about like 60% of penetration.
Right.
So this adoption of technology will complicate how people are going to access financing, because the rate of adoption of digital infrastructure happens at a far lower pace if you look at the rural parts of the country, which kind of increases the unbanked population. So while it is a demand related issue and like all of these challenges are there are also supply related constraints here, which kind of complicates the situation. So if you look at strategies of the fintech firms and how they lend, they are still fairly concentrated within the urban quantum. I have a slightly differentiated point of view here, but I feel like while this divide has always existed, I think that this pandemic is the kind of external nudge that we required to build or like to bridge this urban rural divide. Stakes are really high today. They are higher more than ever to ensure this penetration of digital infrastructure is enabled as swiftly as possible within the rural areas. But then again, like my point of view sounds great theoretically, but in reality, like if I be slightly more practical and a little less idealistic, the solution to ensure availability of financing has to be smarter. So it cannot be an all or nothing kind of approach, but we need to come up with strategies that will provide simplified technologies along with operational ease in availing financing within like remote corners of the country. So how about like coming up with remote vans with bill payment kiosks to facilitate the collection better? Like that's possibly something we can evaluate.
Right.
So maybe we will also see a surge in alternative financing sources, but it's very tough to say. Like even if you look at the urban poor segment, no, forget about whether they'll be able to access credit or not, or like what kind of interest rates are going to be charged. But just basic like plain vanilla banking has become a challenge. For the longest time, I had been like, since the lockdown started, I had been encouraging my maid to open a bank account. And it took her more than a month to just get her account number. So, checkbook and debit card is still like weeks away. You like with limited bank staff availability, constant engaged tones on like banking customer care service centers. Banks today, right now, are struggling to provide operational support. Like forget about if they will be able to provide anything more than that right now to a very backward and like a different segment of the population. So people are losing jobs. You're looking at reverse migration of laborers. There's a massive seasonality in the nature of agricultural work, which may affect the way employment rates are looking like. But we are definitely in a situation where rural India may be looking at very, very stressful times ahead. So it's going to get a little tough.
Right, right. So I think great point which you touched upon was the unemployment rates in rural India. And in fact, our next question is very pertinent to that topic, which is that there's a lot of unemployment in the rural India now, not only considering the current situation, but also the seasonal pattern of employment, etc. And because of that, demand for microfinancing will surge, which banks won't be able to cope up with, as there is an increased demand for educational and housing loans. So, how do you think the banks will keep up with this trend?
So, see, the reason why I think microfinance as a space has incredible amount of potential is because of the principles on which it is built, like trust and community. A crucial element that we sometimes tend to miss out when we think about this kind of model, microfinancing model, is the frequency of repayment. So the entire system has really high shoe leather cost, and that means that if you're looking at a collector or an agent, their job is generally to do weekly visits or daily follow-ups to bring in the kind of efficiency that we see in collections or repayments in the microfinance segment. And this sort of setup, it has become nearly impossible right now. The sheer inability of the agents to maintain frequent visits now is coupled with like stressed cash flow situation of the members of microfinancing schemes. And households and like small businesses, all of them are requesting for moratorium. So much so that one study stated that the households' cash holes have depleted to the point that almost 70%, I think approximately 70 odd percent of microloan borrowers would want to claim moratorium. So one of the financing bank, they also reported that default on these small ticket size loans was typically seen to be around 5%, but in recent times it has gone up to almost 90%. So if you look at it broadly, the two major pillars of the MFI space stands massively affected, which is households' cash flow, which have become stressed. Like, you've mentioned that there's increased unemployment. So the cash flow situation has become far more unpredictable. And the repayment structures have gone for a toss. So And nevertheless, availing financing even from this source will face the same challenges as traditional banking will face. So, with digitization being the key to whether this space is going to survive. Coronavirus has had a large impact on the entire SHG BLP channel also, the whole bank linkage program. Uh, that is also facing like a fair bit of stress. This entire space was already struggling with bad loans being accumulated, and now the problem is further accentuated. So if you're looking at just this space, you are unable to conduct meetings, you are unable to mobilize savings, and these saving kitties were largely driven by physical cash. So obvious challenges related to social distancing crop up here too. But I think government is taking systematic initiatives to bring in the digital transformation that is required in this space. So whether it is encouraging people to use social media channels, whether it is promoting the eShakti app that was launched by NABARD, or conducting trainings on digital literacy, or probably providing flexibility in the repayment schedules, all of these things will sort of pave a path for these programs to sustain during these times. And I'll just take one more minute to add this important point. I have always been really fascinated with this space, okay? And one of the primary reasons is that this whole double bottom approach is what is, I believe, is going to ensure that these institutions pull through. When you have social objectives set in place, then I'm sure these institutions will find a way to stretch themselves and accommodate the stressed cash flow situations of the household. So while RBI is doing its bit to infuse liquidity and support the whole NBFC MFI space as much as possible, I feel it's still a ventilator kind of approach. So I guess here's to hoping that these institutions will pass on this liquidity benefit further, keeping in mind the principles and the values that this entire industry is built on.
Absolutely, absolutely. Building more upon the challenges you mentioned, which will be faced by the traditional banks in the wake of the current situation. So the NPA risk rates of most banks are on a rise. So do you really think that these banks will be able to cope up with these increasing NPA risk rates, and how will they actually account for this, and what will their trajectories be like?
See, boss, NPA crisis is definitely a growing concern for the banking sector, with this whole risk of bad loans increasing significantly in the coming months. Growing NPAs essentially means that banks will be expecting a squeeze in the cash flow that is expected to be received from their borrowers.
Right.
Maybe some of the steps like providing moratorium is going to delay this. But definitely at some point it's going to become really challenging. And all of this whole built up around the NPA, this all adds to the risk aversion sentiment within the banks. So to support lending, RBI has been fairly sensitive and has, like I mentioned in the previous answer also, it has attempted to infuse liquidity in the system, but that lending is not that liquidity is not being passed on. So even if we are looking at multiple rate cuts in the repo and reverse repo, banks are still shying away from lending. And if you look at traditional banks, they're parking almost 7 to 8 lakh crore money overnight. So all of this kind of shows the kind of sentiment that is there in the market. So concern for NPAs just kind of puts more pressure on the entire system. I'm sure some relief did come in with the announcement of increasing the threshold for invoking solvency, which was increased to up to 1 crore, or RBI brought in changes with the NPA recognition and resolution clauses. But even if you look at while the crisis was beginning, so in early March or mid-March, for capital conservation purposes, RBI introduced deferment of dividend payments against profits. So that were earned during the March 31st, 2020 wala financial year. But given the depth of this problem, no, I think more robust solutions are needed right now. So maybe evaluating options like one-time loan restructuring option. Will that be the solution for it? Can we expect further relaxation in the capital adequacy requirements? And I don't know, but like if this persists, will we come to a situation where the governments will have to provide bailout packages to the banks? I really hope not. But the real impact of this growing NPAs, the real impact that it's going to have on our financial system will probably unfold in the next couple of quarters.
All right.
So,
So you think the impact of the NPAs is actually yet to be felt?
yeah, I think in the company, I'm sure we're all sort of feeling it. It's been going on for a while now. But in the coming quarters, the real impact of this will sort of truly unfold, and we'll be able to judge the situation better, like how worse can it really become.
Right. So we've touched base upon microfinancing, cashless transactions, NPAs. Our last question for this episode is directed towards the insurance space. So many
Okay.
companies had taken insurance policies to cover losses arising due to certain unforeseen circumstances. And the question that stands now is that whether coronavirus is covered by such policies. So, do you think this puts an additional, so to say, pressure on the financial sector with respect to these claims made by the people?
Yes. Like, okay, so obviously, like insurers never had the foresight of including global pandemic as a cause for business interruptions. In any case, these business interruption policies are typically designed to cover loss of profit for the period within which the business is disrupted. With no end to the crisis in sight, it's definitely a challenge to include such a pandemic as an event. Moreover, it's difficult to claim loss under the property policy. So for business interruption clause to trigger, it is important for the property to suffer actual physical loss. And this is generally associated with like natural calamities, but not global epidemics. So for obvious reasons, losses due to non-physical damage are difficult to account for. So there are also discussions around what about claiming it under a force majeure kind of clause.
Right.
While it is possible, it will require corporates to really look into the fine print of the insurance arrangements. So and you'll see us, like if we go slightly global here, for economies where insurance markets are far more developed, you'd see them being better prepared, where businesses are seen to have taken separate pandemic insurance. To give you like a recent example, sometime in April it was announced that while Wimbledon in UK got cancelled, the club may still receive pandemic insurance, which by the way they had been paying for since the last 17 years, since the SARS epidemic in 2003. But IPL stands to incur losses upwards of 3,000 crore rupees. So, with that being said, insurance claims now will definitely run the risk of greater disputes. So, corporates should ideally try to maintain very detailed records of losses, extensive documentation to provide as evidence. And the wordings of these policies can be quite ambiguous. So it's important to seek like legal or like an expert advice to determine like a potential admissibility of these claims. So while all of this may lead to an increased pressure on the corporate side, but I was attending this recent webinar where the head of this insurance company that deals with the trade credit insurance said that they are fairly confident in handling this kind of pressure. Okay. So in any case, like for the entire system, the amount of strain is dependent on how long all of this is going to last for. My personal guess is next couple of years till a vaccine is developed, mass manufactured, and distributed for circulation. In fact, come to think of it, this extremely important question does loom large over our heads, which is our financial system strong enough to sustain the stress for the tenure of the crisis?
Absolutely. Right, right. And in the light of this question, do you also think that these companies which are coming up with insurance and protection plans for COVID-19 will also see a great response from the audience?
Yeah, definitely. A lot of the insurance companies are including and finding ways to include this event as a part of their policy. But then again, like it is going to stress the situation further. So there is going to be a legitimate stress that we are going to look at.
Right. So, having discussed the impact on the various areas in the financial market, I think this marks the end of the fourth episode of SocioCast 2020. I would sincerely like to thank Ms. Kanika Rana on behalf of Enactus Hansraj for taking our time and providing us with her very valuable inputs on the topic. Thank you so much, ma'am.
Thank you so much for having me.
Thank you, Kanika. It was indeed very insightful. I would also like to thank Janvi for a wonderful question answer segment. We hope that our listeners have as much clarity as they could get with respect to the banking industry and how it would reshape itself post the pandemic. If you like our episode, don't forget to like, subscribe, and spread the word. Till then, stay tuned.